Welcome to Disrupting Japan, straight talk from Japan's most innovative founders and investors. I'm Tim Romero, and thanks for joining me. There is a lot of debate over the role that government should play in fostering innovation. From American founders loudly demanding that the government just get the hell out of their way, while quietly bidding on government contracts and accepting millions in subsidies, to Chinese entrepreneurs double and triple checking that their business plans and public postures are well aligned with the expectations of the central government. Japan, of course, is taking her own path. And today we sit down with Yuka Hata, Senior Managing Director of the Japan Investment Corporation, or JIC. Now, Yuka will explain all of the details in just a few minutes, but briefly, JIC is a government-capitalized organization that invests in VC funds, private equity funds, and also creates its own venture funds in order to make direct startup investments. Furthermore, JIC's mission is not just changing the economics of Japan's startup ecosystem, but changing the culture of Japan's startup ecosystem as well. And looking around, they seem to be having a real impact. Yuka and I talk about the kinds of startups and funds that JIC invests in, the two biggest challenges that new Japanese VCs struggle with, and what it's really like for female VCs in Japan right now. But Yuka tells that story much better than I can, so let's get right to the interview. So we're sitting here with Yuka Hata, the Senior Managing Director of Japan Investment Corp, or JIC. So thanks for sitting down with us.
Thank you. Well, thank you so much for inviting me. Such a great opportunity.
I'm delighted to finally get you on the show. We've been talking about this for a long time.
Thank you.
Well, let's start by talking a bit about JIC. So JIC, you make a lot of investments, but JIC is not really a traditional VC fund. So briefly, what is JIC? What's your mission? What do you do?
So JIC has been created as a government-backed investment fund in 2018 to strengthen global competitiveness of the Japan's industry. JIC has a kind of strong mission to really support the generation industry in a two-way. One, we have created JIC Capitals, which is a private equity fund to pursue industry consolidations or restructuring. That's more private equity play. And the other side is obviously more kind of venture capital play to create the next strong industry out of our country. For that reason, we created a subsidiary called Venture Growth Investment. And they are providing mainly growth stage risk capitals. And in addition to that, we recently decided to provide more early stage risk capital to the life science and deep tech space. Those are the direct investment arm for the JIC group.
So the purpose of JIC is not to promote the startup ecosystem specifically, but to enhance competitiveness of Japanese industry and the economy as a whole.
Yes.
Then let's talk a bit about the venture growth investments, the direct investments into startups that JIC is making. What kind of startups are you investing in?
The VGI's strategy is to provide risk capital mainly at the growth stage. However, having said that, they are currently managing the fund 200 billion yen, which is probably equivalent to 1.5 to 6 billion US dollars. And out of that pocket, it has 30 billion yen to deploy to the early stage of the startup, which are life science and deep tech. But beside that, we have also created the Opportunity Fund with a size of 40 billion yen to support listed startup and to support secondary transactions before the IPO.
So how would that work. Let's start with the second one. The Opportunity Fund. This is supporting startups that have already listed or are about to list. What are the activities?
VGI set up a 40 billion yen opportunity fund with a strategy with a secondary investment and aftermarket strategies. What that means by aftermarket is we support the listed companies' fundraising. The issue is in Japan, many of the listed startups have an issue to raise the money after IPO. They've been raising money quite a bit before the IPO. Then once they listed, all of a sudden they actually has nowhere to really raise equity capitals. They could, to some extent, raise money through the debt financing because obviously they increase kind of credibilities after the listing. However, Japan's kind of problem is not many startups are successfully raise the capital after.
I see. That is a real problem right now, particularly in life sciences in that, but actually across the board where Japan has traditionally been very easy to IPO as a small company. And a lot of VCs have really pushed their startups to do pretty safe, low valuation IPOs where they're still growing. They still need that capital.
They need capital, but then the reality is if you cannot raise the capital for the growth, it will be difficult to look for the further growth after the IPO. So that is really the serious kind of issues in the Japan's IPO market.
Have you seen a change in Japanese VC behavior around this? Because I agree, pushing a startup to IPO too early does not help the startup. It's good for the startup to stay private as long as possible. You get a lot more forgiveness and flexibility from VCs than you get from public markets.
Mm-hmm. Yes.
A lot more patience from VCs than you get from public markets. So are you seeing a change in Japanese investor behavior in wanting their portfolio to stay private longer?
We can see the trend that startups choose to be private to make an IPO big enough. Because in the past, well, still now, there are so many small IPOs. But that also affecting Japan's VC fund return itself. That kind of risk capital ecosystem we really have to create. But the issue is small IPO, small return, small fund return. Obviously, why the LP bothers to deploy the money to the VC fund? They could choose for the private equity fund where we can seek that the decent return out of the control transaction.
Is the goal of this to seed the market and hopefully get enough private VC money as well following the strategy and allowing life sciences to grow privately longer?
Yes, but the difficulty here is we don't have enough risk capital to continue to support the life science or even deep tech, especially the growth stage.
Yeah.
On the other hand, issue is surprisingly, most of the VC fund wind up their fund at the 10th anniversary or even with a 2-year extension. That's all. So it's not like US VC fund or European VC fund, you kind of continue to extend, your fund, forever. So that's the reason that in a startup got kind of pressure from the VC fund or some of the shareholder pushed to the small IPO. So that's the reason that we feel like we have to build the secondary market in this country.
Okay, that totally makes sense about the need to support and nurture that part of the ecosystem, to build it out. But in terms of startup selection, so CVCs have a reputation of being slow and complex investment committee structures, but a government-sponsored fund must have even more oversight and even more accountability and related overhead. So what's the process of selecting which startups get this investment?
It's very good questions because when we are doing the investment activity through the INCJ deploys the money out of their balance sheet. For that reason, each direct investment together with the LP investment always needed to seek METI's approval. Obviously, we don't have flexibility and speed up for the direct investment. So that's why we have decided to create subsidiary structure that JIC itself is an LP investment. In this case, when the VGI makes investment decision, it's their own decision.
So, in addition to venture growth investments, or I should say the main part of JIC's investments is investments in other funds. And it's a huge range of funds. There's Japan funds like Will and Globus. There's global funds, NEA, Sozo, Atomico. I mean, really high quality funds. What's the strategy? What are you trying to achieve with these fund investments?
So our main purpose to support VC ecosystem is we wish to provide risk capital to the local fund managers. And we always gonna make sure that where is the space that risk capital is not enough and needed support from the government fund like us. So we identify the space mainly more the deep tech space is definitely they're looking for the risk capitals. And growth stage is the one that we don't see many players for that space. We have been supporting many deep tech focus fund, including university fund like Kyoto University Fund, Miyako Capitals, and Waseda University Fund. In addition to that, recently we realized many generalist funds such as Globis or Spiral or the Dimension, they are willing to deploy the money to the deep tech space. So if these generalist managers wishing more to deploy to the deep tech space, JIC is also backing those kind of generalist fund.
So does the investment come with a commitment to invest in deep tech or to invest in particular stages?
So they have their own strategies, but if they have an intention to allocate to the deep tech space more than 10% roughly, and the JIC is happy to support their fund. Let's say if you have a strategy for 20 to 30% deploying the money to the deep tech, 70 to 80 is really outside of the deep tech space, which is fine for JICs.
Okay, the investment funds themselves aren't earmarked for a particular investment, but you're just looking for funds that support the overall ecosystem development within deep tech and growth stage investing.
Yes, exactly. Again, deep tech, they really need the capital. And secondly, deep tech space shouldn't be only supported by deep tech focused fund. If the generalist fund has a strong background to support management team or the business expansions, deep tech startup makes sense. Not just a university fund or deep tech focus fund. It's very important that diversified shareholders are supporting to the deep tech startup. That's obviously creating more successful deep tech startup in the future.
The monetary investments obviously help. They give the funds more money to deploy towards these startups. But one of the things I found most interesting from our previous discussion was that JIC also views these investments as a way of influencing venture capital culture and behavior and startup culture and behavior in Japan.
Yeah, thank you for asking. That's something always I got a feedback from the outside of Japan, because if I explain to the JIC's kind of activity, people really said, wow, that government fund is such supportive to the VC ecosystem, because we're not just only providing risk capital, we are trying to foster or support the local manager, be more sophisticated managers in the future to accept the money from the institutional investors in and outside of Japan. And for that reason, JIC's been engaged with all investee fund manager to give some, guidance to how to deal with governance issues, conflict issues, or how you can build a team. And interestingly enough, I think we've been deploying the money to roughly 25% of our portfolios is first-time managers.
Oh.
So when it comes to the first-time managers, they still have not really much clue to how to build a team. Or sometimes we give some advice to maybe you need some other strong partners. So in that case, we actually are involved in the hiring process or give some advice to the fund managers, and then look, probably, you may need this kind of background of people to really support your platform. So we are pretty much hands-on LP, but to make sure that we want to bring this kind of managers to be successful in the future.
So you're actually helping them with recruiting and staffing, or what form does this help take?
So we don't obviously support recruiting itself. It's more like if they seek the guidance from us, we are happy to see the candidate together. And also, if we see that, let's say, maybe these managers, they need the person who are more stronger capability to build a platform. Many of the cases, VC fund top managers, they are, visionary person and strong network creators. Maybe he or she be good at deal sourcing or executions or the investment. But to be successful VC firm, it's not just only the investment. You actually have to understand the strong accountabilities, right? Fiduciary duties to really build the VC firm itself. So you're not one venture capitalist of the firm. So, he or she used to be the star player of the XYZ corporation or VC firm. Once you are spin out, you are at the top of the VC firm, mean that you yourself have to manage the platform. That's very different capability.
I think a lot of founders find themselves in the same situation when they're first starting their startup after working at...
Exactly. So it's very interesting that VC people is the one to support the startup entrepreneur to build a company. But sometimes venture capitalists have to think about how to build your own platform as a corporation.
What form does this support take? Do you introduce them to VC mentors who can give them advice? Do you just give them casual guidance on what to do next? How do you support them?
We try to actually see what's really missing on this kind of platform. And when we decided to commit to the XYZ fund, we've already identified what are the issues that need to be improved. Obviously, we get a consensus with the manager, okay, this is something you need to be improved, X, Y. Obviously, something sometimes happen after the investment. That's also happened. Let's say operational issues we could not identify before the investment, but that obviously also we fix the issues together with the managers.
I'm sure every case is different, but what are some typical challenges that new VCs have that you work with them to fix as part of your investment? What would be some typical challenges they face?
If it's internal issues perspective, always kind of new managers, they really need to identify very good number two partner. Number two partner is very important. I believe, Jesse believe, that yes, one top, he or she is always good vision, strong passion, but these persons sometimes they only think about investment. It's very typical. Most of the cases, they are definitely good investors, but not good management of the firm. So that's something we always identify. You probably need someone who can support you. Very different character from yourself. Typically, you tend to pick up similar type of the characteristic, but you definitely need someone who have the capability that you don't have, right?
That is actually incredibly valuable. Are you focused mainly on operational issues, or are you also looking to address some of the cultural issues in Japan's VC ecosystem, like female representation or more community involvement?
Yes, we've been starting to having a dialogue with the investee fund managers, or at the time when we conducting due diligence, we always ask such kind of question, what's your policy to accommodate female professionals? So that gives them a kind of hint that, oh, they should actually have more female in their platform. Most of the cases, they said, oh, we have female professional, let's say 50%. But if we look into carefully, they're typically middle back office peoples or support position, let's say PR or the HR. If you look into the investment professional, capitalist position, almost none, right? But that's changing. That's really start to change. And I think one of the case we give some advice that if you hire one female in institution, because some of the people say that, oh, it's so difficult to hire the female professional. There's not many candidates. And then you hire just one in a boys club. You can imagine how difficult. So that's something I interact with the GPs that, look, you think about if you are only one male capitalist in female institution, how you feel? Do you think you can perform well? You can always think about the situation, the other side. So that's why we recommend that you should hire possibly not one female in the platform, 2-3 female, so that, don't put the female professional in a really minority.
So much pressure on one person. That makes a lot of sense.
Exactly. So that's kind of the dialogue we believe start to let the GPs to open eye and hiring more female in their platform. That's really happening.
And to be clear, these aren't requirements for GIC investment. It's just guidance and questions and advice along the way.
That's something we've been debating recently. Our CEO, Yoko-san, he strongly committed to the diversity and equity and inclusion to push through to the ecosystem. So we have our own project team within the JIC. And even inside the JIC, we are debating how we can actually create a diversified culture in the JIC firm itself. And also, obviously, from the investment, we are also discussing what extent we should actually require the GP to, because we have to be a little bit careful. Obviously, there's an ideal KPI, but, we have to a little bit think about what is the very realistic solution to start with, then gradually to bring it to the ideal.
But this is a very Japanese approach. I think if we're looking at Japanese regulations in general, they always seem to start with general information sharing and setting vague objectives and lots of conversation and slowly becoming requirements.
Becoming a requirement, yes. But I'm definitely sure that we will come with a requirement within this year.
Okay, so coming soon.
But then, what kind of requirement we should start with? That's something we have to be carefully think about. So for that reason, we recently have done interviewing all the female professional of our investee fund, all the each capitalist. So tomorrow we are going to report back to our executive team. What would be the outcome? What the concern we have identified through this interview?
Will you be sharing that information? I would love to see that.
Yeah, so we should think about, obviously, we cannot see.
I mean, not the people, but summaries.
Yes, we should think about, we will probably debating tomorrow after reporting to our executive.
For whatever feedback is working, I would love to see the summary of those opinions.
Because I think we should play such an important role on how we realize DI in this kind of ecosystem. If this is not the GIC, who else can do it? So that's something we feel that we should definitely take a strong initiative.
And I think this points to a larger difference between US and Japanese innovation culture, where both in the US startup ecosystem and the Japanese startup ecosystem, the government is hugely involved, hugely influential, but they play very different roles. Where in the US, it seems that everything should happen behind the snes. The funding is provided, but the entrepreneurs always get out in front and say, no, we did this ourselves and the government just needs to get out of our way. And in Japan, it seems like the opposite happens, where it seems very important for the government to show how much they're supporting and show their leadership, not from behind the scenes, but actively involved in the kind of guidance that JIC is doing. Why do you suppose that is? Because it's so different.
Why? Not sure about the US, because the US have a history long enough. So I believe government no longer need to take a strong initiative to really support an ecosystem, right? So that's something probably different. It's more like private market driven. It's been really developed. Many players there, many investors are there. And I think probably we are more following kind of European ecosystem. Europe is more driven by the government fund to build kind of ecosystem. Like BPI France in France or KfW in Germany, there are government investment fund to really support kind of VC ecosystem.
Well, I think the financial support is always welcome, and the U.S. is very clear on its financial support. But I think it's interesting in looking at, let's call it cultural leadership, where in Japan, the Tokyo government's been very active, the national government's active. You mentioned if JIC doesn't provide the leadership on women in VC, who will? And so it just seems that the cultural aspect of it, the Japanese government at varying levels seems to be very much out in front.
Do you think maybe this is quite recent? Maybe because the Kishida cabinet really set the goal that I believe that all the government division really try to take initiative, how we can achieve such kind of target. So, but that's something whole country try to really build a startup ecosystem.
As part of that effort, a lot of efforts being made to attract foreign VCs and foreign entrepreneurs into Japan. Why is that important?
Again, to make Japan's VC market 10 times bigger, we need more capital. Only Japan's investors' money can fill up this, market need? I don't think so, right? If we look into the European ecosystem, we are 10 years back of the European VC ecosystem. And why such a huge growth seen in the European ecosystem? Because the global fund managers come in to support startup. So majority of the monies come from the outside of the Europe. So money is one, capital is one. And also to create a strong startup, JIC believes that we definitely need to create very diversified shareholder environment. Let's say if the startup only supported one VC fund, obviously they can only rely on this fund manager's support. But if you have a different type of the VC fund, they can actually utilize all that resources. So many of the local managers, they don't really have a strong background of the overseas business or overseas expansion port. So that's something come with overseas managers to work together to support startup global expansion.
That makes sense. And also the foreign startup funds will be more likely to be experienced in kind of that growth stage investment that JIC is trying to foster and develop as well.
Exactly. So that was the reason we have invested NEA and followed by Vertex in Asia and Atomico in Europe. We tried to create the corridor in between Japan and the US, Japan and Southeast Asia / India, or Japan and Europe. If the case that the startup, the business model wise makes sense to expand to Europe, why not to work with Atomico? Or if it's more global expansion for US, definitely for the NEA is one. So we started to create more the bridge in between Japan and overseas.
I think it is great that there is so much interest in Japanese startups overseas. In talking with both the foreign founders and the foreign funds that are interested in Japan, what is the biggest misconception that foreign investors have about Japanese startups or about the Japanese startup ecosystem?
Many times I often asked by overseas investors, does entrepreneurship exist in Japan? First of all.
Yes, it does.
First of all, some people really don't really think about Japan as a place to create a new business. They almost forgot we've been creating such a strong global companies, like definitely Sony or Panasonic or even Toyota. Day one, they are it was a startup, right? So that's something they really feel. But then also, people always ask me, most of Japan's young smart people tend to work for Mitsubishi or Mitsui or the Japanese bank. Do you really think that the smart people can come to the startup ecosystem? So that's some misconception. I'm actually trying to take the opportunity to speak out in a conference, kind of overseas, and
so
then
it's like they're imagining Japan from 20 years ago.
yes, exactly, yes.
All right.
But it's actually really too, even until recent, to be frank.
That is true, yeah.
Because when I start to look into Japan's kind of VC ecosystem, probably 2017, 18, and that makes me really surprised. Wow, when I see the entrepreneurs, they are such a smart, young, talented people are really leading the startup. But that's quite different when I look into the ecosystem 20, 30 years back.
That's true. I think sometimes we forget how fast things have changed in Japan.
Yeah.
So when I started doing Disrupting Japan 10 years ago, but I would always ask for the origin story. How did you start your startup? Mm-hmm. And people would have these just crazy stories of their wife threatening to divorce them and threatening to be kicked out of the family and these huge risks they had to take. And about 6 years ago, 5 years ago, I stopped asking it because everyone's like, well, my family was really supportive and we could raise this money and my professor thought it was a good idea, so we did it.
Yeah.
And I'm like, that's great. It makes a really boring storytelling, but it's but it's great. That is what it's. I think sometimes we forget how fast things have changed in Japan.
Yeah, I did the same. I start to ask their background and the history and what bring them to become the entrepreneurship. And then, recently, it's quite like a normal story. During my student life in university, one of my friends started their own business. And I thought, maybe why not me? So that's it.
That's great. That's great.
It.
That's what we want.
What about your parents? Is it your parents are entrepreneurs or, kind of crazy character? Nothing, right? So that getting more, more normal trend.
And I mean, that is great. I think we need to appreciate how much things have changed and how fast things have changed sometimes.
Yeah, that's something probably we continue to speak to the outside of Japan. I think Japan is definitely changing.
Well, listen, Yuka, before I let you go, I want to ask you to look into this crystal ball and tell me what Japan's startup ecosystem looks like 5 years from now.
5 years from now.
What changes are we going to see? JIC is pushing for all kinds of changes. What will things look like in 5 years?
I believe 5 years from now, we will definitely see more young entrepreneurs will create a company outside of Japan, one. And from out of Japan, more and more serial entrepreneurs, those people will aim to create much more bigger startup. Rather than targeting small IPO, more and more entrepreneurs will target to create more big corporation before the IPO. That's trends definitely coming right now, and we will see more success case.
So you mean more Japanese will travel to the US and Europe to start companies? or that Japanese entrepreneurs will be more globally minded and grow into those markets?
Both. So that's the reason we also invested the fund of funds called the Transpose recently. Through the Transpose, we will get exposure to the Y Combinators. When we look into the Y Combinators investment, there's really only few Japanese startups are selected compared to the Korea or other Asian region. This is something we feel like we should fix it. So that have to be both. More strong global mindset entrepreneur want to create a company to challenge the US market from day one. Maybe out of Singapore, that's also happening. Maybe out of from Japan, they're already starting the business, but they're more like not just Japanese entrepreneurs with a Japanese team aim the global market. I believe more international background people will come into Japan VC ecosystem, and this could be more the mix of the international team. That should be more than welcome, not just only Japanese entrepreneurs, Chinese entrepreneurs, American entrepreneurs who will start the business in Japan. So that diversified environment, we believe we can create 5 years from now on.
So we'll be looking at a much more global
dynamic ecosystem.
Well, fantastic. Well, Yuka, thank you so much for sitting down with me. I really appreciate it.
My pleasure. I enjoyed the conversation.
And we're back. Sometimes when we are so focused on what remains to be done, it is far too easy to overlook all the progress that Japan's startup ecosystem has made over the past 10 years. And one of the most interesting shifts that Yuka pointed out has been the shift away from looking to Silicon Valley for startup policy and looking to France. Of course, America is still the gold standard, the very icon of the passionate and innovative founder. But in terms of government policy, there's a lot Japan can learn from the French. Another thread that seems to weave its way through so many Disrupting Japan interviews and many of my solo shows and public speeches as well is how Japan's large number of low-quality, low-value IPOs is holding back innovation. As Yuka explained, it's a trap for the startups. They find that they can't raise the speculative growth capital from public markets, and they should not expect to be able to do so. I mean, public markets just are not structured to support that kind of risk-taking. These low-value exits also suppress VC fund returns, which then keeps a lot of global capital from investing in Japanese startups. But as we've discussed before on Disrupting Japan, Japan's whole VC industry was originally structured to rely on these kinds of safe, low-value IPOs. It's changing slowly, but only as fast as the traditional VCs are underperforming and losing deal flow to their more modern and ambitious counterparts. JIC's efforts to change venture capital culture, however, have been more direct and more impactful, both in their efforts to educate and level up Japan's fund managers and fund management practices, and in their advocating for greater access for women in the industry. And Yuka has promised to share the public version of the DEI report we discussed as soon as, and if, it becomes available. With so much going right in Japan's startup ecosystem, and with so much further to go, sometimes it's easy to forget just how fast we're moving. If you want to talk more about the government's role in supporting startups, Yuka and I would love to hear from you. So come by disruptingjapan.com/show225 and let's talk about it. And hey, if you enjoy Disrupting Japan, share a link online or just, tell people about it. Disrupting Japan is free forever, and letting people know about it is the absolute best way you can support the podcast. But most of all, thanks for listening. And thank you for letting people interested in Japanese startups and VCs know about the show. I'm Tim Romero, and thanks for listening to Disrupting Japan.